Hi guys, welcome back. In today's video, we will dive into one of the most anticipated tech updates of this season. I will go over NVIDIA's latest earnings report that just came out yesterday and over everything that Jensen Huang unveiled at the Computex show in Taiwan earlier this month. And there was actually a lot of pretty exciting news, including Jensen's expectation of $5 trillion in data center spending over the next 3 years. Of course, as always, we'll also look at some market data, and I'll show you why I think that the AI and data center market and NVIDIA with it still has a long way to go. And as a former IT specialist turned into physics engineer who is now working for a semiconductor company, NVIDIA is right up my alleyway. That is also one of the reasons why they are the biggest position in my portfolio right now. So if you're holding NVIDIA or thinking about buying it, this video will be interesting for you. And if you're new here, my name is Florian. Thank you for joining me today. So let's start by looking at the most recent earnings numbers that NVIDIA announced just a couple of hours ago. They reported a record quarter again with 44 billion in revenue. This is up by 12% from the last quarter and 69% on a year-over-year basis. But their gross margins, net income and EPS, while still growing on a year-over-year basis, are down by over 10% from the last quarter. So, despite the record revenue, could this be the first sign that the AI trend is slowing down already? Actually, not at all, because this decline is attributed to the 5.4 billion charge that is related to their business in China with their H20 chips, which was impacted by new export restrictions that were imposed by the US government. Without this charge, the picture would have been different. Because if we exclude them, the gross margin would have been at 71% and the EPS at $0.97 on a non-GAAP basis. So in terms of EPS, this would have been a growth of around 8% instead of a decline, and the gross margin would also be around 10% above the reported values. This is still a slight decline in margins, but I don't want to complain too loudly with gross margins of still over 70%. Of course, most of this growth was driven by the data center market, but the gaming sector did also grow by 42% compared to the first quarter of last year, and the automotive sector by 72% even. So the growth in the automotive sector, while much lower in terms of absolute numbers, is almost on par with the growth in data centers. This is especially nice to see because when I first bought NVIDIA, my investment thesis for them was mainly their strong position and growth for products for self-driving cars. So even if their main growth driver is now AI, which I would have never expected a couple of years ago, it is still nice to see that my thesis is also working reasonably well. The growth in gaming came from the latest Blackwell graphic cards that started selling last quarter and had the fastest ramp up in company history. But this is also the most volatile market and depends a lot on new product releases. In general, it is also growing, but the numbers are fluctuating each quarter. For the coming quarter, they expect a revenue of 45 billion, again up a bit compared to this quarter. But unfortunately, this is lower than initially expected because it also includes an expected loss of 8 billion that is again connected to the H20 sales in China. Their gross margins should return to above 70% levels again though, and for the full year, they even expect the gross margin to be in the mid 70% range. It is also good to see that after initial production problems, their Blackwell production is now running full scale and the general demand for these products is incredibly strong, as Jensen Huang put it. And earlier this month, he also held a keynote speech at the Computex Expo, which is one of the largest IT expos in the world and the largest one in Asia. It is also one of the most important trade shows for AI and server solutions. And in the almost 2 hours he's been on stage, he had a lot to say about the AI market and NVIDIA's new products. One of them could even be a real game changer, I think. First, he announced that the new Grace Blackwell systems are in production now and are available on the market already. That comes pretty soon after the regular Blackwell chips have only been in production since late last year and are only available on the market since February this year. These Grace Blackwell systems, or GB200, are combining Blackwell chips for AI computing with their Grace CPUs for high-performance data center applications. So they are not resting on their laurels, but instead are even speeding up their development. And the Grace Blackwell chips are not the end here. because Jensen Huang also promised that they will increase the performance of the system every year in Q3 from now on. And this year in Q3, which is not so long from now, they will already bring their new version, the GP300, to the market. This version will have 1.5 times the inference performance, 1.5 times the memory, and 2 times quicker networking performance than the current Grace Blackwell chips. That is roughly the same performance in one node that the whole Sierra supercomputer with 260 full stacks had in 2018. And what is more important is that it will have exactly the same architecture and footprint as the GB200. So you can now mix and match different generations of this chip in the same data center or even rack, which gives you a great flexibility when designing and outfitting a data center. And to increase this flexibility even further, Jensen Huang also announced their NVLink Fusion, which I found was probably the most interesting announcement. NVLink is NVIDIA's technology to connect different GPUs within one server rack with very high speeds, which enables them to share their memory and computational power. They have used this NVLink to connect the GPUs for 5 years already, and this is now their 5th generation. This new NVLink Fusion consists of switches and the NVLink spine, which is able to move 130 terabytes per second. And just to put this into perspective, the traffic of the whole internet is roughly 115 terabytes per second. So one of these spines could easily move the traffic of the whole internet. In fact, the connection is so fast that it basically combines all chips and nodes in one rack, so that they are able to function as if they were on the same mainboard. Up to now, this technology was only used for NVIDIA's own GPUs. But with NVLink Fusion, they are opening it up to their partners so that they can also use this for their custom ASICs, CPUs or GPUs. So chipmakers can now partner with NVIDIA to also use this for their own AI chips. I think this is a very clever move from them and could be a game changer. Because recently we have seen many hyperscalers like Amazon, Google or Microsoft working on their own custom AI chips. And of course, they will want to use their own chips sooner or later in their data centers. So with this move, NVIDIA encourages them to still stay within the NVIDIA ecosystem while also be able to mix and match different chips in the same data center. I think that this will lower the barrier for these companies to start fitting out their newly built data centers with NVIDIA's Blackwell chips and still be able to switch to their own chips in a later stage or the next scale up. And of course, they don't need to build up the whole data center all at once, but have a greater flexibility in their designs. It also makes sure that even if they use their own AI chips, they are still at least buying some components from NVIDIA. But they have not only shown products for large data centers. They are also working hard on bringing Blackwell's hardware to everybody's home with their DGX Spark that will be available in a few weeks and their new DGX stations. These DGX stations even have the capacity to run a 1 trillion parameter AI model like Meta's Llama model from your home. They also announced the RTX Pro servers and NVIDIA's AI data platform for intelligent storage infrastructure. So basically, they are increasing the ecosystem of AI products and are bringing designated products for all kinds of different applications with different requirements. This also includes their CUDA platform that by now has a large range of applications for different, very special use cases. And because these apps are very targeted for each application and are able to run very efficiently on NVIDIA's hardware, much more efficiently than they could ever run on regular CPUs, they accelerate very complex tasks like quantum computing research. It also helps that by now, more than 4 million external developers are building apps on the CUDA platform, as Dylan Patel from Semi-Analysis points out. This not only helps to quickly improve these apps and fix bugs, but also creates a flywheel of tools, tutorials and kernels that lower the barrier to entry to newcomers. He also points out here that this results in most breakthrough ideas appearing in the CUDA version first. So to me, it looks like NVIDIA, together with its many partners, has its fingers in every part of the AI ecosystem. This way, they are able to identify and explore new AI applications and markets before anyone else does. And the next big step, according to Jensen Huang, is agentic robotics.
And so this is really the great thing about the era of agents, where we need a large amount of synthetic data generation, robotics, a large amount of synthetic data generation, and skill learning called fine-tuning, which is a lot of reinforcement learning, and enormous amount of compute. And so this is a whole era where the training of these AI, the development of these AI, as well as the running of the AI needs an enormous amount of compute.
But despite all this, there has been some concern with investors in the last month that the AI spending, especially of hyperscalers, might slow down. And the trade war and Trump's export restrictions have also not helped, and as we saw, have led to $4.5 billion in charges with their H20 chips for China. But just 3 days ago, Reuters reported that NVIDIA will launch a cheaper version of their Blackwell chips for China. And even though these chips will probably also be cheaper than the previous H20 chips, I still think that the company can recover most of their China business with these. On the other hand, they are also expanding their international collaborations to other regions, such as Abu Dhabi, where they recently partnered with G42, OpenAI, Oracle, Cisco and SoftBank to build a 5 GW AI campus that should go live next year already. And even Microsoft, that already dialed back their data center spending a bit, expects to have another record year and is still on track to spend more than $80 billion for data center infrastructure in this year alone, as Noel Walsh, the president of Microsoft's cloud operation, explained in this LinkedIn post in April. It is true that they are dialing back their investments though, but this largely affects developments in a very early stage. And to give you one last example, xAI plans to build the next generation of their supercomputer Colossus 2 that should support up to 1 million NVIDIA GPUs that will cost between 35 and 40 billion. This is quite a step up from the 200,000 GPUs that Elon is using for his first supercomputer, the Colossus. Let's just hope that he doesn't use illegal and highly inefficient mobile gas turbines to power this data center again as he did with Colossus 1. So massive AI data centers are being built up all over the world. And Jensen Huang said this in his keynote.
As we speak, there are $5 trillion of plants being planned around the world. Over the next 3 years, $5 trillion of new plants. Because the world is reshaping, because reindustrialization moving around the world, new plants are being built everywhere. This is an enormous opportunity for us to make sure that they build it well and cost effectively and on time.
So over just the next 3 years, he sees $5 trillion of investments in AI data centers all over the world. Of course, these 5 trillions include everything, not just NVIDIA's chips, but still. And in the earnings call yesterday, he also said this.
Well, we have more orders today than we did at the last time I spoke about orders at GTC. However, we're also increasing our supply chain and building out our supply chain. They're doing a fantastic job. We're building it here on shore in the United States, but we're going to keep our supply chain quite busy for many more years coming. And with respect to further announcements, I'm going to be on the road next week through Europe, and it's just about every country needs to build out AI infrastructure, and there are umpteen AI factories being planned. In the remarks, Colette mentioned there's some 100 AI factories being built. There's a whole bunch that haven't been announced.
So I think it's safe to say that the overall spending on AI is still going strong, and even if individual companies are dialing back their still massive investments, they all need to increase their computing power. And the best way they can do this right now is with NVIDIA's latest chips. I also believe that NVIDIA is in a very good position to further widen their ecosystem and even explore new and adjacent markets with it. But these are just my thoughts. So last but not least, let's also have a look at how super investors handled NVIDIA in the last quarter. But before we do this, if you liked the video so far, it would be amazing if you hit the like button and subscribe to the channel so you don't miss out on my next one. As a thank you, I promise you to read all of your comments and to reply to pretty much all of them. So thank you very much. There are currently 9 super investors who hold NVIDIA in their portfolio. And from these 9, 7 actually increased their position in NVIDIA in the last quarter, while 2 reduced it. 1 even sold out of the stock completely, but in this case the position was very small with only 2,000 stocks and only made 0.04% of this overall portfolio. So overall, the buys were much more than the sells, especially when we look at the volume. Analysts are also pretty bullish on the stock. The 56 analysts that give a 1-year price target see an average 1-year upside of around 22%. They also expect an EPS growth of 24% per year until 2028 and a revenue growth of 23.7%. If this comes true, this would be pretty insane growth, especially for a company the size of NVIDIA. I also find the valuation reasonable and, in fact, much more reasonable than many other tech companies. Their PE ratio with 32, EV to EBITDA with 25.8 and price to cash with 31.5 are all a bit above the sector median, but are around 30% below their own 5-year averages. But the PEG ratio, which is the most important valuation metrics for me because it also takes the growth of a company into account, is with 0.92 well below the median. According to Peter Lynch, a company with a PEG of under 1 is undervalued. And in this AI and tech market, it is actually pretty tough to find companies with such a low PEG ratio. So all in all, I am still very positive on NVIDIA, and I even thought about increasing my position when the stock crashed in April. But as they are already my biggest position in my portfolio, I finally decided against it in the end. I do believe though that there might be short-term headwinds with the China business from US politics, but for long-term investors like me, I think they are still a great pick. But this is just my opinion, and because I'm already invested, I am definitely biased. So I would be very interested to hear your thoughts down in the comments below. And if you're also interested in one of the quickest growing markets, the cybersecurity market, and would like to first have some industry insights and then see my approach to invest in this very fluid and quickly moving market, you might want to check out this video right here. And of course, this is no financial advice. So before investing, please do your own research and only use this video as a starting point for your own analysis. That being said, thank you so much for watching, guys, and see you in the next video.